What am I multiplying? What am I multiplying? I want the share of the profit after tax. What is Mirror's profit after tax? 10 or 9? 10. Yeah? We want the share of the profit. No, it's not 10. And the dividend is not the trick. What's the trick? Come on, you've read this question. I've read this question. Thank you. We bought the associate on the 1st of May 2011. So it's only been an associate for 9 months. So we would therefore multiply by 9/12. We would therefore multiply by 9/12. So we would have here 35% of 10,000 times 9 divided by 12, and that is giving me 2625. And that replaces the dividend received. So we would need to eliminate the dividend received. We would need to eliminate the dividend received. How much dividend have you received? I ask you again, how much dividend have we received? They've paid 1,000. Now, did they pay 1,000 in the first couple of months? Or did they pay 1,000 at the end? Because if they paid 1,000 in the first couple of months, I didn't get any of it. If they paid 1,000 in the last few months, I got it. When did they pay it? Before or after? After. So I would then be getting 35% of the 1,000. Never ever time apportion dividends. Never ever time apportion dividends. Dividends are paid on a day. Boom. You've either received it or you haven't. Don't say I've got 9/12 of that dividend. That's rubbish. Profits accrue evenly over the year, but dividends don't. Right. I'm impatient. I'm hungry. I'm tired. It's nearly lunchtime. But I want to lay out my answer. We are about to engage in a frantic battle. I'm about to turn to a fresh sheet of paper. There are some easy marks to be gained. We have been concentrating on the workings, the depreciation adjustment, the impairment loss, the associate, the disposal. We've been concentrating on those fairly high-end adjustments. But there are some nice and easy and gentle things to do which we can only really be given credit for if we lay out our answer. Now, presentation is key, speed is key. So effectively, the rule is that we cross-cast. I am very happy to leave space as we go. So let's take revenue. Major problem here. I would imagine that in your exam you're either going to be time apportioning, which we're not, but we've got to translate. So that is dinars. The average rate that we are using is 2.7. So the average rate we are using is 2.7. So I am going to take 180,000. I'm going to divide that by 2.7 on the face. And therefore this is going to give me 66,667.
We sold one of our subs,
Yes.
so why are we consolidating?
Okay. Are we doing a P&L or balance sheet?
P&L?
Okay. So if you got divorced on the last, so when did we sell the sub? On the last day of the year. Okay. So let's imagine you get divorced on New Year's Eve. Okay? That's what's happening here. We're selling our sub on New Year's Eve, on the last day of the year. Now, when you go to bed at midnight, you're a single person. When you draw up your list of your assets and liabilities, you do not include the unfaithful ex. Yeah? The unfaithful ex has been disposed of. You are now, at a balance sheet date, a single person. So you would list out your assets and liabilities that are yours. You are single on the balance sheet because you've disposed of the sub. Even though it was only 24 hours ago, 24 minutes ago, it's no longer a sub on the balance sheet. If you are telling the story of the last 12 months, in the last 12 months, the story, have you been married or single? You've been married for that 12 months. Yeah? Now, it's a slightly extreme situation. What might happen in other questions is that you might have a divorce that took place 3 months ago. Now, if the divorce took place 3 months ago, then I would be time apportioning that by 9/12ths. So if you would like me to time apportion it, I'm very happy to time apportion it by 12/12ths. Yeah? Because for the year, it has been a sub. Okay? So telling the story of the year, it has been a sub, but at the year end, it's not been a sub. Does that make sense? Yeah? Because it's taking place at the year end. And that's why I do try, at the beginning, to do that group thing there. And the disposal took place at the year end. Otherwise, we'd have that time portion. Right. Anything else on revenue? Sorry? Intercompany. Yeah, we have some intercompany. So this is from the question. So we've got the intercompany, and we would eliminate the intercompany, and the intercompany is 16,800. Now, in an exam context, you may have a further adjustment. So there may be an IFRS 15 point. There could be some further adjustment here on revenue. We haven't got that in this particular question. So let me add up our revenue figures. We've got 104,800, we've got 25,500, we've got 6,667, and we have got 16,800. So we have our revenue of 180,167. Next up, I have my cost of sales. So I've got my revenue, and the next up, I have my cost of sales. And if I'm thinking about my cost of sales, I'm thinking about the same processes that we've had before. My cost of sales are basically cross-cost. What have I got? I have got here 40,000. What have I got? 14,300. What have I got? Dinars, 80,000. 80,000 divided by the average rate of 2.7. So I take my 80,000, I divide that by 2.7, and therefore that gets me $29,630. If you've eliminated the intercompany sales, then you've got to eliminate the intercompany cost of sales, and so you're eliminating that a second time. Anything else? Anything else? Yes. Yeah, twice. So we've got additional depreciation from working 2. So we've got additional depreciation from working 2, which we said was 2,000. We had a second depreciation from working 5, and that additional depreciation was translated. and so is already 2. So we know about that. Do we have any other additional expenses? Impairment loss. So we have our impairment loss on the first subsidiary, and the impairment loss on our first subsidiary was 18,000. And that is our impairment loss of 18,000. It's not there, but you will also have a provision for unrealized profit. That's a very common adjustment that you would be thinking about in a consolidation process. It's not there, but if there was a current service cost, I'd bring in the current service cost. It's not there, but if there was a share-based payment, I would bring in the share-based payment. It's not there, but you could bring in other expenses if the if there were mistakes. No point in adding it up. No point. Yeah? Don't care. No point. Don't care. Yeah? Leave space. Don't add it up. Don't care. Waste of time. I'm hungry. You're under time pressure in the exam. Distribution costs. Probably half a mark. Yeah? But it's better than adding it up. 24,000 plus 3,400 plus dinars 7,000. 7,000 need to be divided by 2.7. So you've got your 7,000 divided by 2.7. That is giving you there dollars 2,593. Leave a space. Next up, administration expenses. What have you got for administration expenses? You've got 11,200. You have got 6,320. You have got dinars 7,340. Your dinars need to be divided by the average rate. So your 7,340 gets divided by 2.7, and therefore that gives you in dollars 2,719. Investment income, and I pause. When I begin to look at my investment income, I think of my investment income as 9,000 plus 500. Why have I paused on investment income? Apart from the fact that it's running a lot. Why have I paused on investment income? Yes, because of the associate. I am going to have to remove the intercompany dividend. Now we decided when we looked at the associate that the intercompany dividend from the associate was 350. So included in the parent's 9,000 is 350 that is intercompany. So my investment income here is 9,150. Does that make sense? Yeah? Now I'm so nearly finished. Yeah, it's only going to take me another 5 minutes or so. I'm so nearly finished, I'm going to carry on. I've got my investment income at 9,150. Now, I've got to deal with the associate. Let me deal with finance costs first, though. Let me deal with finance costs first. strictly speaking, I have got my gain to the group on the disposal, and I have also got my income from the associate, and both of these items would have to be included in a profit before tax. So I've got my gain to the group on the disposal. Now I'm looking around for that number. I did work it out. We did work it out. Yeah, that was 28. Gain to the group on the disposal is 28. And income from the associate? We said that was 2625. Then we'll deal with our tax. To be good at P2, I think needs quite a range of skills. And one of the skills is just working very quickly through some boring numbers. You know, once you've decided what you are doing, translating these numbers at the average rate, cross-casting these numbers, you make that head down, you have that presentation, and you follow it through. And if you can do it quickly and neatly, that's a fantastic skill to have. 26,000 divided by 2.7 is 9,630. So 9,000 plus 680. 9,000 plus 680 plus 9630 is giving me 19,310. This will then give me my profit for the year. Let me symbolize my profit for the year with two crosses. It's a symbol, it's not a number, because the number is a crazy number, too complicated number. Yeah, it's not realistic to bother, there's no marks in it. And then I begin to embark on my other comprehensive income. Now, as I said yesterday, you should distinguish in other comprehensive incomes between recycled and not recycled. So items not to be recycled, and this would be your PPE gains. So this would be your PPE gains, and your PPE gains are, well, so in other comprehensive income, in your other comprehensive income, picking up from the question, you have got your PPE gains of 10 and 2, and they contain PPE items which are not recycled. What else do we have? Because we've got an overseas sub, we've got a group exchange difference which turned out to be a loss. Now these items are recycled. So we've got here, always leave a space, items to be recycled, items to be recycled, and this would then be the exchange loss on the foreign currency, on the retranslation, and it's on the retranslation of the net assets, and on the retranslation of the goodwill, and this was done in sort of working 6, working 7 territory. And we got the goodwill was 11,900, but the net asset figure escapes me momentarily. What was the exchange loss on the retranslation of the net assets? I have lost 119.
119.
Let's see if I can find it. Sorry, I'm just.